Warren Buffett just bought Google, and this is skyrocketing Google's valuation to a level that I've honestly never seen before or even expected. The analysts are re-rating Google's future prices by as much as 10 to 20% from what they had said would be less than 2-3 weeks ago. Just to give you an example, Morningstar said that Google could reach 300. After this article, boom, 340. Very crazy. And it was a pretty significant stake that Warren Buffett bought. So before the news broke, Google was trading at 272. After the news, Google is at $288. Google is the only Mag 7 stock that actually stopped selling off after this news. The other 6 are still selling off. So in this video, we're gonna break down where and how Google makes its money. What is the sentiment around Google? Is it positive? Is it negative? What is the euphoric level? And then we're going to take a look at the fundamentals of Google. And lastly, we're going to do a price projection to see, is this stock still worth buying, or is this something that we should skip? And I think you will be very surprised at the results. I know I was when I plugged these numbers in. So without any further ado, let's get started with the sentiment. So the sentiment around Google is at an all-time high. As you can see, people are posting bunch of things of other investors that have a major stake in Google. One of the most famous one being Nancy Pelosi. You can see she has like 16% of her stake in Google. Very impressive. First of all, I did not think she would have one of these big, slow moving companies as a core piece in her portfolio, but more power to her. Maybe she finally got a smart investor and maybe she stopped playing the market, but I highly doubt it. Then when you start taking a look at the earnings, there is an extreme positive sentiment. People are posting everything green about Google. Like this chart from Investing Valuations is just posting absolutely green. Great in revenue, great in region, expansion across the region. Chart shows you something. Each post, each chart is showing you something extremely positive about Google, basically encouraging you to buy the stock. Again, like I said, euphoric level hit an all-time high. So none of this is surprising me. The fact that we have so much good news, everyone's posting all these charts of how, look how great Google is. Like this one from Evan, he just showed you all the great revenue quarters that Google has. Google in 2019 was making 46 billion. Today it's making above 102 billion. Very impressive. Again, it's this euphoric weight around this stock that Warren Buffett bought it. Now, I'm not saying that's what's causing this optimism, but this is definitely fueling that much more than it was before this news broke. But if you take a look at Google's breakdown, how Google makes their money, I think it's very impressive. First of all, majority of their revenue still comes from search. Now, this is only a last quarter chart, but this shows you the segment breakdown, which what we're looking for. In reality, Google makes around above 350 billion. This just shows you the last 100 billion that they made in the last quarter. So basically, search accounts for more than 50% of their revenue. Then you come down to YouTube, then their Google gaming division, and then Google Play, Google Cloud, and the last one is which is less than 0.00001% of Google's entire revenue is other bets, and that's just mainly Waymo. Transparency's sake, that 300 million that they make in other bets a quarter or $1 billion in a year is just Waymo. Nothing else is actually contributing to that other bets. Everything else is a loss. So that revenue that's coming from other bets, it's a Waymo. It's expected to be a big revenue generator for Google in the future. Now, another thing I want to take into account, Google isn't a company that's just sitting down and just resting on their laurels. They are doing heavy research and development spending. I mean, they're spending almost $13.8 billion on research and development. This has nothing to do with expansion in the data center, which are spending over 20 to 30 billion a quarter. This is just, let's come out with new things and improve the things we already have. And this is mainly going to their LLM. Just transparency's sake, all of this research and development is to develop their LLM. And it's working. It is the second biggest LLM after ChatGPT. Now let's take a look at their fundamentals. Google over the last 5 years has almost compounded their revenue above 20% on average. On average, they have years where they had less than 1% growth in their revenue. This was around the time where almost everyone crapped the bed when the interest rates started going up. Google was impacted too. They were not a company that was immune to them. So if you take the average of last 5 years is above 20%. In the last 2 years, however, their revenue grew about 13. So which brings their total revenue today at $380 billion. We're going to go ahead and plug that into commoninvestor.net because we need to add the current metrics in to get future metrics when we do our stock price analysis. Then for the number of outstanding shares, they have about 13 billion and they've been buying back the company since 2019, about 0.1% in the beginning of the century, then really aggressively when their revenue started shooting up while the stock price stayed oppressed above 2. Most recently, in the last 12 months, they bought back about 2.1%. Here's the honest to God truth about the share buyback. They can't now buy back 2% of the company over the next 5 years. In my opinion, it's probably going to be less than 2% over the next 5 years. They've been doing a 2% every year for the last 5 years. Number one, their revenue is growing much faster than even they expected. Number two, the stock price was being oppressed. So they could spend more money and get more of their shares back and increase value to the shareholder. That's not happening. The optimism is at its all-time high. So they can't buy back that large amount of shares anymore. And number two, they're doing heavy data center spending. So again, that's going to be another negative catalyst that's going to prevent them from buying back massive amounts of share. But I still think they'll be able to buy back at least 2% of the whole company over the next 5 years. Profit margin is 32%. I mean, every software company has this. It's ridiculous. I still get jaw dropped seeing 32% as a profit margin. I mean, I'm used to seeing 10, 20%. I've never seen 30% until I started this channel and started reviewing these software companies, and whoa, it's incredible. So now that we have all that metrics in, let's see what the analysts think could be Google's revenue over the next 5 years and what we get as a stock price by 2030. So when we ask this question to ChatGPT, what do most analysts think that their stock price is going to be for Google over the next few years and what it could be by 2030 tells us $677 billion. Now currently analysts only project for 2 years. It's been this way since we started. So most analysts simultaneously agree that Google can go beyond 500 billion from all the sites and resources that ChatGPT research. So by 2027, most analysts agree that 508 billion is possible. Then that number shrinks by a large margin when you go to 2030. But taking into historic trends, maturity, and a few other factors and analyst projection, which are not that much for 2030, we get about 677 billion for 2030. Gemini thinks, which is a Google LLM. I just want to mention that because that's pretty funny. It thinks also 671 billion. So it actually thinks less than what ChatGPT can make. I happen to agree with 671 billion. Number two, I think inflation is going to absolutely skyrocket over the next 5 years. I mean, we're printing money like crazy. So just the inflation rate is going to have this company go beyond 500 billion over the next 5 years. So adding another 170 billion to that, it's possible. 715 billion is what Claude thinks. I think it's a bit out there. And finally, we get almost 800 billion with DeepSeek. I'm going to ignore this. This is a little too bullish. This could happen. And the way that can happen is through Waymo. But I don't like to have my primary thesis, especially when doing stock evaluation on companies, that their valuation come from products and services that don't exist. So I'm going to ignore the price that DeepSeek is giving me, and instead I'm going to go with the range between ChatGPT and Gemini and say that this company can make $675 billion over the next 5. And then, like I said, but before we move forward and give my thesis on the number of share buybacks that this company can do, I just want to mention that just to save a little time, I edited out all the information, but I did put it in here. The revenue, the number of outstanding shares, the PE, profit margin, and its current stock price is 280. So all that has been plugged in, and now we're going to evaluate to see what we get as a stock price when we put our thesis, or the research when we put in this thesis, we're going to get an idea what the stock price is going to be. So for 2030, we're saying the revenue is going to be $675 billion. Google will be able to decrease their number of outstanding share by 2% just because I feel like a lot of CapEx spending is going to happen. A lot of data center spending is already happening, and the stock price is going to be a lot more than what it was in the past. So all those contributing factors, I'm going to say over the next 5 years, it is safe, and I want to stay at a safety side that 2% is possible. And then for future PE, I'm going to put in 30. I feel like that market is going to be extremely optimistic on Google, especially if it surpasses $675 billion in revenue. Then I'm going to say the profit margin is probably going to take a little bit of a hit overall, just because right now they have more demand than the resource available to meet that demand. So I feel like they're going to start a pricing war when the demand is capped, when they have enough resources to meet demand on the cloud side. So I think that is going to become a bit of a pricing war for the short term. So I'll give them a knock on 2% on profit margin. When we put all of this in, we get a stock price of 470, meaning you will not get a 2x return. And for you to get a 2x return, you have to buy this stock at 230. Horrible. Okay, you are still doing better than the S&P 500, but not by much. You're only doing better than the S&P 500 by 15%. So if you put this money into the S&P 500, you would actually have $316 with no effort required on your part. So just to get an extra 150 and not even getting a proper 2x return from today's price with all the risk that's facing Google, I think this company is a no-go on most analyst projections. I don't know why they're hyping up this stock, but I would not touch this company if I was buying it today. By the way, I own 200 Google shares worth almost $60,000. Take a look at my Robinhood right now. And I am telling you, according to the price that we're getting off the thesis that most analysts are telling you to buy this stock with, doesn't make sense. According to their own thesis, Google's stock price for 2030 is going to be $475. Is that a company? Is that a price that you're okay paying? So let's do another analysis and say that Google is going to continue to grow at 15% a year that it has been doing for the last 5 years. Then you get a stock price of $545 if it can continue to grow for 15% over the next 5 years. The reason I didn't do 20 is a bit too ridiculous, so I'm not going to touch 20, although that's been the average for this company for the last 5 years. I'm going to say 15, which means that it would have a revenue of over $775 billion. That would give you a 1.89x return from today. Meaning, even in this most bull case, you would have to buy Google at $272. You simply have way too much risk with not enough reward when it comes to Google to buy this stock today. I do believe that this company is gonna run up a little bit more just because of this insane optimism around this company, but a further consolidation for this company is only around the corner. One bad quarter, one bad forecast, one bad anything, you're gonna see this stock consolidate below 250. Do I think you can buy this at like 190? Absolutely not. You just can't. It's just not that type of market. And the fact that there's no negative catalyst for this company is always going to keep this company at a premium. If I were to get into this stock, I would buy it below 230. That's just my honest opinion. I would buy below 230 and then DCA downwards. But if I can't reach that price, I wouldn't even touch this company. I'll go look at somewhere else. But you do what you want to do. This was just my thoughts, my analysis, my whole observation on Google. And if you like this website, if you like this analysis, do your own analysis on commoninvestor.net. It's free, it's awesome, and it is a tool I created to help out investors like you and me, so we can actually have a price and have a price behind a thesis. Because I always feel, and I still believe this to be true, price with a thesis without a price is a guess, and a guess makes you lose money every time. So go check this website out, and please like and follow, and I'll catch you guys in the next one. And please share this video with someone that will really appreciate it. And with that being said, I'll catch you guys in the next one.